right now. If you don't do 20, then yeah, there's still some benefits, but you're not going to get paid. Okay, so you need to be prepared. You got to have a plan. If your plan A may be, stay in 20 and get a retirement, you got to have a plan B. You always got to have a plan B. Okay. Something else to consider is, as leaders, if you're not squared away financially, that's going to affect your life. It's going to, it's going to add. I'm talking about stress because you're constantly worried about certain things. If you're in debt, okay, you're not sure how to get out of it. Okay. Later on in life, if you haven't prepared for retirement, then that's something you're going to be worrying about. Okay. It's just nice to have those things taken care of, have a little security. All right. Something else just came to me. It's just and I'm not saying that any of you are going to do this, but if people are struggling financially, that creates a certain temptation, okay, to perhaps, fib a little on a expense document or something like that. When you do traveling, TDY and stuff like that, it creates a certain amount of temptation, okay? So that just reduces that, all right, for everyone. So it's good for you and your soldiers to be financially squared away, okay? I'm amazed it still happens, but I remember when I was a S2 of 7 PSYOP groups, and I had my NCO, my #1 NCO. Turned out he was taking his government credit card and using it to buy all sorts of things for himself. It's just, what was he thinking? Okay, but that it happens. Okay, so it's important to be financially knowledgeable. Right. This will change slides. Is that right?
It will, sir.
Up. Do I do up?
Should.
Down.
I'll do it, sir. I got you.
Okay. Thanks a lot.
No.
Yeah, it's a PDF, so you just hit the. Go down the next one. If you just hit the space bar. Or,
So yeah,
There you
if
go.
you want, sir, you can actually hit that yourself up there. It'll work as the mouse.
where?
Right there.
Right there? Okay, all right, I'll do that. Okay, all right, that's a disclaimer. So I'll give you a second to take a look at that. I do work for First Command, but this is not going to be a First Command commercial. Okay, that's our founder, Carol Payne. Yeah, I'm not going to talk about First Command too much. All right, face-to-face coaching. That's one of the things that I think is very important. Even if you self-educate yourself, right, there's still a lot of mistakes to be made, okay? Like we call those the people who self-educate and then come up with their own plan and execute themselves. We call them do-it-yourselfers, all right? Now, some things, fixing your car, yeah, you could probably do it yourself. You could probably do that pretty well, okay? Well, not everything, but certain things break, you can probably fix. You just grab a manual and fix it yourself. How about dentistry? You want to do it yourself dentistry? Okay, all right. So this is kind of one of those things. I mean, you could do some yourself, but if you really want a good plan, you should probably see a financial advisor. I don't think you're going to Forrest Gump your way into financial success. Okay, that rarely happens. Okay, this is what you have now: SGLI, TRICARE, Thrift Savings Plan. Yeah, I'm going to talk about a bunch of these things. You have you have a housing allowance. You get better deals in the commissary. Survivor benefit plan. Anybody know what that is? You would not know what it is. Okay, all right. So you don't really have to worry about it for now. I'm just when you retire, that will become important. It's not something you have to think about for it at the moment. Okay. You have some tax breaks. You have to get deployed, things like that. Subsidized child care. Certain situations.
Don, are you going to talk about all that stuff?
Yes.
Oh, you are? Okay, because I don't know if all of them know what they have right now.
Right.
Or what they will have
well,
here
then this will be an education for you.
shortly.
Okay.
Okay.
All right. So this is Servicemen's Group Life Insurance. There's also Veterans Group Life Insurance, and if you do not have SGLI when you leave the military, you will not be able to get VGLI. Okay. And I'll talk about this in more detail later. But Veterans Group Life Insurance is not as great a deal as Servicemen's Group Life Insurance by any means, but it's not bad for term insurance. Okay, Thrift Savings Plan. Anyone not know what this is?
Hey, this is important. So if you don't know what TSP is, you need to understand this before you walk out of here.
All right, Thrift Savings Plan is kind of like the Army's 401k. All right, it's not a 401k. It's different in a lot of ways, okay? But it's the closest thing we have. Thrift Saving Plan is a way for you to put money aside for retirement, okay? And it's like a savings account. It will be invested, okay? It will be invested, and There's certain tax advantages, which I'll get into, all right? And you can save, and over time, you put the same amount each month, and over time it will build, and then when you leave the military, you can continue, let it grow. You won't be able to contribute to it anymore, but you can let it grow after you leave the military, all right? And then when you retire, you can pull it out and have to collect distributions to supplement your retirement pay, or as part of your retirement income, all right?
Hey, one of the recommendations I have for you guys, when you go to Bullock, right, you don't start getting paid until you graduate Bullock, is that right, or what? When do you start getting paid? You start getting paid when you arrive at Bullock as a second lieutenant? So I would tell you, whenever you get to your Bullock location, I don't know if they have a class on this. I don't, now I'm a lieutenant, now what do? I would hope that the Bullocks have got some kind of thing like this, right, where, okay, now you're getting paid, here's what an LES looks like, here's my pay, oh, by the way, you need to take a percentage of your paycheck and start an allotment for the thrift savings plan.
Right. I'll get into this more later. I'll tell you right now, it's a pretty good plan, okay, and you should take advantage of it. There's a couple reasons for that. All right, GI Bill, all right, it's a great deal, okay, you can, it'll pay for 4 years of college education for one person, basically, including housing. I really think the housing allowance is going to go away pretty soon, okay? I've been reading military.com, and the problem is it's being abused. People are taking some night class, I've seen them, I've talked to the guys doing it, and they're doing it for one reason, that's the housing. They'll take some night class, okay, and as a result they get a housing allowance, which is another two plus grand a month, okay, for their income. They're really doing it just for the income. They'll get a degree in something that they're not really concerned about. They'll even take scuba and helicopter, and there's not really a big market for scuba instructors. It's kind of saturated. They don't make a lot of money, but they're doing it anyway because they get the housing allowance. Right? So it's being abused, and as a result, Congress can do it. All right, this is sort of a promise, but they can break it. Okay, Congress can take away the whole thing if they want to. I think they'll probably take away the housing allowance, but leave the tuition intact. That's my opinion. Okay. Oh, and let me go back here. Okay. Just so you know, a lot of people don't know this. Okay. If you want to, you can transfer this to your children. All right. So if you've already got a college degree and you don't decide that you don't want to use it for your master's, let's say the Army pays for your master's. Right. You can transfer this to your children or other relatives, but you must have at least 6 years of service, and you have to commit to an additional 4 years of service. And I have people right now who come to me wanting a plan to educate their children. I go, what about they got 2 kids. I go, well, the first one we can take care of with your 9/11 GI Bill. They go, oh, I never transferred it, and they're retiring in a year.
Is it 4 or 3? Is it really 4?
What's that?
Is it 4 or 3? It's 4 additional ADS?
4, additional 4 years, yeah.
Oh,
Yeah.
okay. I'm good.
All right. So, be aware of this, and people might not tell you. You know what I'm saying? It's one of those things you have to know. Something you have to do to get this benefit. All right. Meaning you have, if you want your children. Anybody here have kids? Okay. All right. We had a few cadets who had kids. All right. If you want to take advantage of the fact that you can give this to your kids, you've got to proactively get it transferred to them. Okay. And it's got to be within 4 years before you decide to leave the service. All right, survivor benefit plan, it's really not an issue for you guys right now. You don't have to think about it at this point. Okay, if you're going to get to the point where you're going to retire 20 years from now, and you're going to get a pension, then this will be a factor. All right, unless you would like to hear about it, or
it's not about me.
You got it covered?
Yeah, not about me.
Tax exclusions. You actually get a lot of tax benefits being in the military. Okay, housing, your BAH isn't taxed, your COLA is not taxed. You get deployed. Okay, a lot of times you're not taxed. Okay, when you retire, all that goes away. Okay, so you need to think about that. All right, this is what we call it paying yourself first. Okay, it's a great concept. All right, when you guys get commissioned, you're going to have possibly the first time in your life you're going to have some money, and it's pretty good money. All right, it's more than enough for you to live on and a little extra to have fun. And the temptation is maybe to go out there and just kind of enjoy life. Okay. All the things you couldn't buy as a college student, you want to start buying, right? The smart thing to do is to resist that. Before you take your paycheck and give it to the car dealership and give it to the nightclub, okay, think about giving some to yourself. That's what we call pay yourself first. So you set up a plan, okay? And that plan should include some savings, cash management, wealth management, and risk management. Cash management means savings for emergencies or short-term goals, basically a savings account or even a checking account. Wealth management is long-term goals like retirement or intermediate goals like getting a college education for your children. All right, you should put something aside for that, in mutual funds perhaps, okay, or some other investment vehicle. All right, and risk management meaning life insurance. So if something happens to you, your loved ones, in addition to dealing with the emotional hardship, don't have to deal with the financial hardship, like where to get the money to bury you. If you're the breadwinner, you know how they're going to replace that income. Okay?
Guys, I've got obviously the SGLI and all that kind of stuff, so if anything was to happen to me, my wife would, receive a lot of money. But I also have additional life insurance that I have opened up a policy on to ensure that my family does take care of on top of what the Army provides. So it's something to think about. There's a lot of good deals out there that you can pay, 50, something like that a month, and you've got, long-term life insurance that will continue to grow for you throughout, until you pass away.
Same thing here.
So just something to think about.
Gotta do it.
Same here. Yeah.
Hey, one of the things I just want to highlight, I don't want to steer thunder,
Sure.
Mr. Canaday, but with regards to paying yourself, guys, with all these, they're called allotments, okay? And all these allotments, you don't even see them, right? They come out of your paycheck, you set it up, they come out of your paycheck automatically, all right? Paying yourself first, doing your mutual funds and all the risk and all that, automatically, without even seeing it. You know what I mean? And you create your income based on not even seeing that stuff, because you don't even think about it anymore, because you know it's going out every month. Does that make sense to everybody? Okay?
This way you get used to living on a certain amount of income, and you're not tempted to blow everything you make, okay?
Or let your wife blow everything.
Or you let your wife, your wife doesn't see it either, that's right. So that can be a good thing, depending on how disciplined and how on board your wife is with your financial plan.
Right, Jenny?
All right, so set goals for yourself. And you should write this down. I don't mean write it down right now, but at some point in the near future, you should make a financial plan. What are your goals? Just like you have your career goals. Do I want to be a general officer? Do I want to just do my 5 years and go out and have some other dream job you want to do? Okay, you should have goals. Do goals change? Absolutely. If the goals change, you change your plan. Okay, but you should have goals. You should write it down, have a written plan. If you write it down, you're more likely to follow it and execute it. You should write it down and then you take action. All right? If you just think about it, gee, I really should start investing some money in something. That's you're not going to act. Okay, you need to take action. All right? Just like a military operation. You set goals. You have a mission, and then you write it down. You come up with a plan, and then you execute. All right, building a financial plan. Best financial plans are personalized. It means customized for you. All right, it's not most brand new second lieutenants. Their plans should have a lot in common, but they are customized. There's little differences between all of you. Okay, some of you may be independently wealthy. Some of you may have kids already, and you want to put them through college. Okay, some of you plan to be single the rest of your life. Okay, you're going to have different plans. All right, flexible because, like I said, your goals are going to change. All right, throughout life, it's just going to happen. All right, and comprehensive. Okay, it includes, like I said, cash management, wealth management, risk management. Okay, it goes into a lot of, you have the details of, includes your pension is factored into it, your Social Security, when you reach, 62, 67, or 70, whenever you decide to start taking it, that's factored into it. A lot of other factors are built into the plan. Okay. This, I hate to see this, and you're going to see this. Some of your soldiers are going to have this problem. Some will be alcoholics once in a while. Some are just going to have trouble, I've had soldiers who are great in the field, awesome soldiers, then come the weekend, they're just downtown raising hell and getting in trouble.
Yeah.
Okay, you're going to have that to deal with, all right? And you're going to have some soldiers who do not know how to manage their money. They don't have the discipline. They see something shiny, they got to buy it.
And the people know that those dealerships outside of all of our Army posts are geared towards taking your soldiers' money. Every single one of them. The pawn shops, the car dealerships, this is the best deal ever. And Joe's like, yep, that sounds good.
Yeah.
I'll do that.
And
I'm serious.
They do a better job than me, okay, at getting soldiers to come in, okay? Trust me, it's right there, you can see it's a brand new shiny truck, they know what they're getting, okay? I'm a big mystery to them sometimes. So, that's gonna be your competition to a degree, all right? So your soldiers are gonna want to buy the shiny thing, and that will affect their job performance. So all of a sudden, they don't have enough money for stuff. They're borrowing money here and there. And then there's a possibility of, him getting in trouble trying to make up for those losses and stuff as well. I'm not saying being in debt means you don't have ethics. That's not what I'm saying. But there's always that temptation is there, and occasionally some people will act on it.
Hey, just real quick, sir. So think about this: 18-year-old, 19-year-old coming into the Army. How much, based on whether, knowing your flock, right? How many of them do you think really have got any kind of guidance on how to manage their money now that they're soldiers? 0, right? Great OPD, NCOPD, leader PD to do with your soldiers. Big value right off, you know what I mean? Right off the bat, demonstrate that you care. Is to talk to them about their financial, you know what I mean? Have them understand an LES, you know what I mean? And you know what I'm saying? I mean, just very powerful, those dealerships and those organizations that are downtown right outside the gate of Post that are causing that, you know what I mean? When they leave Post, they're going to and spending their good hard-earned money. Something to think about.
Thank you. All right, so things you do to trim monthly bills. One of the things I see a lot is, when I get a young client, okay, we look at their entire monthly budget. It's important to get that sort of snapshot of what they're spending their money on so we can determine how much they can put towards their financial plan. And the younger they are, the more they tend to spend on what we call dining and entertainment. All right? And that means going out to dinner every night instead of cooking at home and going out to clubs and this and that. Now, you're going to be, I understand, young person in your 20s, you're going to want to have a social life. You're definitely going to put more towards that. Even if you're very fiscally responsible, you put more towards that than I would at this point in my life. Okay? But you got to rein it in. Okay? Some things you can do is, try and learn to cook for yourself a little bit, you don't have to eat ramen noodles every night. Okay, I've gotten to be pretty good at cooking. We had ones when I was a geo bachelor for a while. I figured it out, broke the code on that. Okay, and yeah, go out to dinner, once, twice a week, but you don't do it every night. And I got people come to my office and do it every night. To them, cooking is making peanut butter jelly. All right. Interest rates. Okay, people get a credit card and they just sort of live with it. They don't even know what their interest rate is. All right. Some of these credit cards are 15, 19% interest. All right.
Hey, just a quick test. How many? Raise your hand if you have a credit card in here. Wow.
All right.
How many of you don't have a credit card? Good for you. Good for you. Why do we use credit cards?
Build credit.
Build credit.
There's so many other ways to build credit.
Yeah.
All right.
That's why I have
Huh?
one.
I have a credit card, but I only use it to build miles and buy myself plane tickets on stuff. I do not pay interest on it. I pay the balance on it every month, and so I basically use that as
If you have the discipline as a senior, great. But we're talking about a 20-year-old, kid who's about to
So
graduate.
that's
I get
not
about
true
2
because
tickets to
there's
England every
there's
year.
20-year-olds that do have discipline to have a credit card and pay the whole thing.
Good.
And that's
Well,
the
that's what I hope.
$20
Yes.
minimum.
Hey, I'm not saying don't have a credit card, but make sure you have the discipline that Silver's got and Flowers has got if you're going to have a great credit card.
Yeah, if you're paying interest on it, you're losing a lot of money.
And make
Control
sure
your
you talk to your
credit
wife
card.
about that too,
Control your credit card. Don't let it control you. Okay.
for your husband.
Ideally, you should pay that off. I mean, it can be helpful in emergencies. Okay, it's good for paying for things online. Okay, so I have a credit card. Okay, the way to work it is to pay it off every month. That's what you should do. All right.
And not out of your savings account.
What's that?
And not out of your savings account.
And you should have a savings account. The savings account is for emergencies and short-term goals. Emergencies, you don't know what's going to happen. Cars can break down, things like that. Oh my gosh, I need to get a new engine. All right, that's going to cost a couple $1,000s. You could pay for it by credit card. All right, and you're going to pay interest on that. But you have a good emergency fund, right? Emergency fund should be about 3 times your monthly expenses. Okay, if you have a good emergency fund, then you can take it out of there. You're not paying huge interest rates. All right. What else we can talk about? Short-term goals. Short-term goals are things like taking a vacation. All right. If you know you want to go to Europe this summer, all right, got to save money for that. All right. If you want to do it, save money for it. That's what your savings account's for. That's part of your cash management. Okay. But back to interest rates. If you have really high interest rates, there's ways of getting lower interest rates. One, you can call the credit card company and say, I don't like this. And if they think you're gonna bolt, and basically borrow money from someone else and or switch to another card, they might lower your interest rate for you. Okay, it can be done. All right. If it's happened to me where you miss a payment or something like that, the contract says they can raise the rates, and they do. And you call them up, and say, what's the deal? I've been a great customer for a long time. One time I'm late, and they'll usually lower it. All right. But they kind of go on autopilot, and they'll raise your rates. All right. Another thing is you can do is you can go to a bank, and you might be able to consolidate your loan. All right. It's one of the things we do where I work at First Command. And a lot of other financial advisor companies will do it too. We consolidate loans, and we can probably get a better interest rate. A lot of it depends on if your credit's, jacked up. Maybe not. We might not be able to help you. All right, but look into ways of dealing with that. One way is to consolidate your loans at a lower interest rate. Credit cards are going to charge you as much as you let them. All right. So back to credit cards. If all you do is make the minimum payments, you're going to end up paying quite a bit. Okay, so here's just one example. $5,000. You get a $5,000 balance, all right, and that's just one lump sum, and then this will take this long to pay it off, and you'll pay a lot more. You'll pay that looks like about a third of the original principal is what you're having to pay in interest. Okay, it can get worse than that. That's just 15%. There's 19% interest rates out there. Okay. So again, like I said, emergency savings account. Figure out how much money you spend each month, and we recommend 3 to 6 times your monthly expenses should be in your emergency savings account. All right. When would it be 3? When would it be 6? All right. If your job's fairly, one reason to use that is if you lose your job. If your job is fairly secure, and I'd say if you're a brand new second lieutenant, you're probably not about to lose your job right away unless you have really serious discipline problems. Okay, you're probably not going to get canned right away. Right? At some point, you got your 5-year commitment anyway. Okay, so your job's fairly secure, so you can probably get away with 3 times your monthly expenses. Right? If you're out of the military, you're an independent contractor. Okay, your job is not as secure. Something could happen tomorrow. All right, then you want 6 times your monthly expenses. Right, saved up. So if you lose your job, you got at least 6 months to go look for another job. You can still pay all your bills. All right. Let's see here. Okay, SGLI. We'll talk about this. Servicemen's Group Life Insurance. All right. Most of you will probably do this right here. It's a pretty good deal. This is good term life insurance. It's good for you guys when you're young. It's really great for us old guys. Okay, because normally, if you get commercial life insurance, it's going to be for a certain period of time, like, VGLI is 5 years, right? So let's say it's 5 years term life insurance. So for 5 years, you'll have a reasonable premium, you'll pay it every month, but you'll be insured for quite a bit, all right? But then when that 5 years is up, that term is over with, you've got to go ask for more, and then the premiums go up, and the premiums go up again. But with SGLI, you're going to pay that same premium for your entire career, all right? So whether you're a 50-year-old general officer or a 20-year-old lieutenant, you're paying the exact same for some pretty decent term life insurance. All right? So I like SGLI, okay? As your financial advisor, I approve of SGLI. Okay.
One thing as well to consider too is that if I don't know if this is a requirement of every unit, but every unit I've been in, if you have an individual in your command that is not getting the full amount of SGLI, they have to receive a written counseling and actually have to sign a document acknowledging that they are not accepting the full $400,000 life insurance. Okay.
If they don't have it, it's because they think they're going to live forever, or they covered some other way, or they're ignorant, they don't know. Okay. FSGLI, Family Servicemen's Group Life Insurance. This is for your spouses and for your kids. Okay. When you guys get married, all right, you can get an additional. You can get $100,000 of coverage for your spouse, all right, and $10,000 for your children. All right. The price for SGLI is $29 a month right now. For FSGLI, it's $25 a month. All right, $25 a month. It doesn't. if you have a spouse, whether you have a spouse, no matter how many kids you have, $25 a month. So I think this is, if you got a wife and kids, I think this is good, all right? Because the wife's covered and the kids are covered as well. If all you got is a wife, okay, all you got is a spouse, excuse me, you have somebody, you can have a husband, okay? All you got is a spouse, then I think you can do better. A young person in their 20s, I can get you $100,000 worth of whole life insurance for about $50 a month. Okay? Somebody tell me some of the difference between whole life and term life.
Term is over whenever you stop paying the.
It's over when you stop paying. That's one difference. What happens? Okay, every time you make that $25 a month payment, where's that money go? Okay. It's not. Do you get any of it back? No. You never see it again. It's gone. All right. With whole life builds cash value. So after about 13 years, typically after about 13 years, the cash value of your whole life insurance will begin to match and then exceed all the premiums paid into it. So pretty much, and I get policies differ, insurance companies differ, but after about 13 years, if you decide I don't need life insurance anymore, or if you decide I just really need money, you can cash that out and it's what we call surrender the policy, and you'll get all the premiums you paid into it will come back to you. Okay, plus more, plus interest. So it grows like it's not like an investment, it's more like a savings account. It grows like a savings account would. So it's not a wonderful interest rate, but it will grow and you can get that money back. Or you can keep it till you die, and that premium is locked in. The premium you got when you bought it is locked in. The premium won't go up, unless you increase the death benefit, right? So the premium's locked in no matter how old you get, no matter how unhealthy you get. You can catch hepatitis, you catch high blood pressure. The premium stays the same, all right? And when you die, then that will go to your heirs. Okay, go ahead.
So is SGLI whole life insurance?
SGLI is term life insurance. Okay, it's instead of for a specific term, it's called employer. It's not used for employment. You see other civilian jobs will have this too. Certain companies will offer term life insurance for their employees. Okay.
So is that why you recommend on top of SGLI going out on it eventually? And
Yes, because when you leave, you'll have this $400,000 term life insurance, which is pretty great. It's pretty great. It's a good deal. And then when you retire, it's gone. And I've got 3 kids. All right, 12, 10, and 7 years old. All right, so I had to replace them, which is what I did. All right, but for family SGLI, okay, if you don't have any kids, I would me personally, I would rather buy the whole life. I get $100,000. I'm paying about twice as much for it, but after 13 years, I get all that back, or I could get all that back if I decide to. Families, if you just got this, after 13 years, you're not getting that money back. Okay, you're never going to see that again. The reason they pay this is because they think you're going to live. All right, that's the deal with term life insurance. They will insure you because they think you will live. They don't think you're going to die. All right, even though you guys do dangerous things, the military as a whole, such a large group, they think enough of you will live that they'll make money. Okay, which is true. All right, whole life insurance, they know you're going to die. The plan is to have it till you die, so the premiums are higher. All right, the younger you are, the less the premium is. But as you get older, okay, if you purchase when you're older, okay, the premiums are higher. All right, but you will get that back in one form or another. You'll either get it back as a cash value if you surrender the policy, or you'll get it back as a death benefit when you die, and your heirs will get it. All right, with term life insurance, you pay it, it's gone. It's like renting versus buying a home. Okay, think of it that way. So that's but if you have kids, then you got that, if you have a lot of kids, then it becomes a little more beneficial. It's not such a bad deal. All right. Any questions on family SGLI? Okay, so SGLI, how long will $400,000 last? All right, seems like a lot of money, particularly to a bunch of college kids who don't have any. All right, but the fact is, mortgage. If you die and your spouse has to go on without you, if this is all you have, she ends up with yes, this is paid off. That's a good deal. Okay, that's great. Okay, car's paid off, credit card's paid off, house is paid for. Now she's got $200,000. All right. She's still got kids to take care of, possibly. She's still got to go out and earn a living. $200,000, you can't live on that. You can live on that maybe 2 years, okay? but after that, she's gonna have to go do something, all right, this lady right here. So let's say he dies, she's gonna have to go do something. Now, as a young person, it's kind of hard to think about this, because when I first got whole life insurance, I was thinking, you know, I'm young, my wife's young, she'll just go get a job, everything will be fine, you know? She doesn't need to sit around for 50 years or something. But the fact, as you get older, you know, it's harder to find jobs for older people, and a lot of old people, as they get older, don't want to go work, all right? They get closer to retirement, desire to go out there, enjoying the workforce after being a homemaker for years, it's kind of hard to do, all right? So that's another reason why whole life insurance, or at least some other insurance to augment that. SULI is a good deal, but will it be enough, okay, for your family's life plan? That's a question you have to ask yourself. All right, so this is the popularity of permanent life insurance. Okay, so it's going up, all right? Again, the thing, whole term life insurance, there's a place for term life insurance, okay? It's temporary insurance for a temporary need, all right? And while you're in the military, your risk, you know, your chances of getting killed are a little bit higher because you do hazardous work, all right? But there's a need for whole life insurance as well, all right? That's for take care of your family. If something happens to you, you come up with a good plan. We come up with a plan to take care of your family for the rest of your wife and for the rest of her natural life, and take care of your children until they can start their own lives, start their own careers, right? And that's where whole life comes into play. All right, thrift savings plan. Okay, I like the thrift savings plan. There's two types. Traditional, and there's now the Roth TSP. Anyone here have any sort of investments, mutual fund, anything like that? Someone raise their hand. What do you have?
Mutual funds and then a Roth with Edward Jones.
Okay, good, awesome. Who else? Would someone say CD?
I have a CD.
Okay. Go ahead.
I have TSP, a Roth IRA with USA, and a brokerage account as well.
And what count?
A brokerage account with
Okay.
USA.
All right. So the TSP, here's the advantage, okay? It is, contributions are tax deductible. So you lower your tax consequences. You know, that year, in the year you make those contributions, that monthly payment, you lower the amount of money that you're taxed on, which is, you know, so you pay less taxes in that year.
And that's also a traditional, you talk about, when you do this, we talk about traditional and Roth as well. Yeah,
Traditional and Roth.
The
So
IRAs, yeah.
this is the same for a traditional IRA. These are very much like the traditional TSP is very much like a traditional IRA. The Roth TSP is very much like a Roth IRA. Okay, there's some important differences.
Do you guys know what an IRA stands for?
Individual retirement account. Sorry.
Okay, that's
Good
okay,
point.
so something that you'll draw when you're 65, right?
Right.
At the end of your,
And these are what's called tax qualified. Okay, meaning you could, of course, purchase a mutual fund. It's not tax qualified. Every payment you make is not deductible. All right. The growth, as your investments grow, certain types of growth will not be deductible. You have to pay taxes on them that year. Okay, this is if you get just a regular retail mutual fund, not an IRA, not TSP. Okay, not a Roth IRA. A mutual fund consists of a bunch of companies put together. Okay, and some of those companies will give out dividends. If they give out cash dividends, those can be taxed. They will be taxed. You will be taxed on them the year you receive them. Okay, that means you make money. It's not necessarily bad. Okay, but just you need to know. Okay.